Just before starting a trade on December 15th, I shared the details with a friend of mine, a trader, who I was on the phone with at the time. He decided to short the Aussie USD along with me. At 10:16 the next morning, he sent me the following text. "Damn, this trade ain't got legs. Underwater? Worried?" I responded, "Nope, it'll do what it will do." The next text, 11:47 a.m. "I'm done. Took the loss." My friend exited the trade manually, and I understand why he did. The trade was stuck in a sideways condition, but the stop was never hit, but it did come close by 10 pips. So what happened next? It fell, and it did so soon after my friend cut the trade off at the knees where he booked the loss. When price pulls against your position and challenges your stop, for some people that can be pretty stressful. Like my friend, many get an itchy trigger finger and they close a trade manually. Whatever the plan is for any particular trade, that plan goes out the window and now you rely on emotions. But here was the problem with my friend. He ignored the plan that I had for the trade. He ignored the numbers that I gave him. Now these numbers were important because one of them cut my risk in the trade automatically. It then allowed me to have an open trade and be relaxed from start to finish. It was quite simple. I gave him the entry and 2 exits. The first exit was designed to accomplish the 2 points I just mentioned. I scaled out a portion of my trade at the same number of pips that my stop was above my entry price. Now you can see in this graphic that 3 hours after I entered the trade, half the position closed to cover risk and spread costs. I was sleeping, so the worst case was a scratch trade. The other part of the plan was a break the low gives a break-even stop, so the worst case would be a winner and a scratch. Regardless of what happens, though, I will not be controlled by emotions, and every move will be methodical. Yes, I would take a full loss if stopped out before the first target, but that's also something I can live with. I'd be frustrated if I saw price go in my favor equal to risk, did nothing, and then got stopped. Besides, while I have done no testing on it, I am sure I have made up the difference with some of the nicer runners over the years, and I've taken perhaps a handful of full losses. Now, when I asked my friend why he didn't take the position off when I did as per the plan for this trade, he went on about it being the end of the year and wanting to make a bang. Besides, he said, why take partial profits and a full loss? In hindsight, though, he mentioned that he could have withstood that rally if he had nothing to lose. Now, he doesn't have to use closing partial as a risk reduction with a profit type of play. What if he would have simply closed out a portion of his position at a loss when it came within, X% of his stop? Since he thought he was going to get stopped out anyhow, which it wouldn't have, why not relieve some of the pressure by cutting partial and then seeing how it unfolds? Maybe doing that would have been enough to curb his frustration, and he would have been involved in the price drop. We may want to trade like a robot, but the fact is that being human in trading, it does have some downfalls. Watching trades erode can be hard on the psyche if you have something at stake. This works for me, and it fits well with what I said in a previous trading video I did. I hope for the best and expect the worst. And while that may make some positive thinkers cringe, positive thinking will not save a trade. And how did this trade work out? Well, my friend missed out on full profits. Look, I firmly believe that my main job is that of a risk manager. Having that mindset has kept me focused on risk reduction strategies, and so far, the wins take care of themselves. Now, do you have a risk management plan?